I'm John Kaiser, conducting a backstage interview of Vanstar Mining Resources, Inc. at the September Virtual Metals Investor Forum. I will be interviewing JC St-Amour. JC, welcome to the backstage interview.
Thanks, John. Thanks for having me.
Since reporting a maiden resource estimate in late 2019, your partner IAMGOLD drilled 7,600 meters in 2020, and this year it is drilling 9,500 meters, of which half is infill drilling, and the rest is to test for expansion of the Renard Zone to the west. The strike length of the west extension is nearly double that of the Renard Zone, for which a resource already exists. Suppose the exploration drilling this year confirms that similar mineralization is present throughout the west extension. What sort of tonnage footprint range would that represent? And if the grade proved to be 1 gram per ton, like that of the existing resource, how many additional ounces could that represent?
Yeah, I think based on the drilling that was done last year in 2020, we've already mentioned that the mineralized zone was expanded to the west by at least 700 meters. And I think that 700 meters, assuming all else is equal, the grade is the same, and based on what we know about the thickness and so on, it could be said that by itself will add 30% to the resource, so an additional, say, 1 million ounces. Now, this program is designed to test beyond that as well. So IAMGOLD is going to continue to test and do some large step outs 200 meters to the west at a time. And if we arm wave, let's say, and that resource or that zone continues all the way to the boundary of the property, that by itself, and again, assuming grades and all else being equal, thickness and so on, that could easily double the resource from where it is today. So, that could bring in 5-6 million ounces in total. So there is a lot of potential in that area. And, that's part of the reason why this program is going on right now, is just to get a sense of exactly where does this resource go.
Now, the market doesn't care about infill assays, but it does care about the west extension hole locations and assays, because we know how to connect the dots in a disseminated gold system. What do you believe will be IAMGOLD's disclosure policy with regard to the west extension drilling as the assays start coming in? Are we going to get them in batches, or are we going to have to wait until March to find out what was accomplished with the west extension drilling?
Yeah, I don't think we'll have to wait that long. I think they will do a couple batches. So they'll do a batch with respect to the infill. So that'll come out as one set of results. And we may only see one set of results for the extension as well. But that drilling should be done by the end of October, let's say, early November, let's say. And I would think that results should come in by year end, and or at the very outside, maybe early in the new year. And I would think that those results will come out around that time. So, a little give or take around year end. I don't believe that they'll come out with results in smaller batches ahead of that. They are a larger company, and, just given how assays come in too, oftentimes from the assay lab, a hole may not come in one shot. You may get assay results from part of a hole and then others and so on. So by the time that you get it all, you might as well wait till the end to announce it. So.
Okay, so suppose that the entire west extension tonnage footprint is decently mineralized. Obviously, the spacing of the holes don't make up a resource estimate, but the Renard Zone is about 92 million tons. So if we have a mineralized footprint that big, and IAMGOLD says, yes, we need to proceed, if they use just one rig, given whatever the logistics are of the location and seasonal constraints, how many years or how long would it take to delineate that resource with the same density as the existing Nelligan resource? And can you tell us too, if they expanded it to 4 rigs, how long would it take?
Yeah, I think again, it all depends on how much how far this zone goes and so on. But depending, let's assume that the same amount of drilling has to be done that was done in the Renard zone, and in the Renard, or I should say that since Renard was discovered, because some of that drilling is not only in Renard, it's also in other zones. But there was, let's say, just under 40,000 meters drilled. So if we drill the same amount in the Western extension with one rig, like one rig would drill, let's say 2,500 meters in a month. That could take, let's say, a year and a half if that's all you had. Having said that, with 4 drills, you can do that now in a quarter of that time. So in a matter of 6 months or less, right? 4, 5, 6 months.
So what we're going to be looking for in the first quarter is a signal as to whether or not IAMGOLD sees the potential to double the resource, which would put it over 5 million ounces and all open pittable, and then the scale of exploration that they pursue. Now, in my view, Vanstar's stock price is cheap because the market does not see any evidence that IAMGOLD is fast-tracking Nelligan towards a production decision. There is a buyout clause that allows IAMGOLD to purchase your 20% after it has delivered a feasibility study. But in addition to the fair value of that 20%, it also has to give you a 1.5% NSR on all of Nelligan. My own visualization of a Nelligan open pit mine using the cost assumptions from the PFS that First Mining Gold produced for Spring Pole suggests that this project meets all the development hurdles just as it is right now. Now, suppose the sort of unhappy outcome of the West expansion drilling is that there's nothing really there that hangs together, and IAMGOLD makes an internal decision that, okay, Nelligan is probably what it is. We need to shift to economic studies, PEA, and start marching to that feasibility demonstration, a feasibility study that triggers the buyout right. But in that window is a chance where everything's been disclosed and they could make a preemptive hostile bid for Vanstar. What protects Vanstar shareholders from an early takeout by IAMGOLD on non-negotiated terms?
Well, I think my background is investment banking, and I was involved in quite a bit of M&A in the past. And I think hostiles are rare in the mining industry in particular, and those that I've seen actually haven't been successful. It's hard to find an example where it's worked, but I know there are maybe 1 or 2, but they're very uncommon. And part of the reason for that is, with a hostile, a company would have to get a vast majority of the shareholders, vast majority of the shares to basically sell and accept the hostile for it to work. Unlike, say, a negotiated transaction where you only need the majority of those who voted, which might be a significantly smaller number than all of the shareholders. So I think the idea of a hostile is not palatable to most companies, and so I don't think it'll happen that way. I think it's more likely that we'd get approached to do a friendly deal, which is more easy to complete for a larger company. And then on top of that, we have, our shares are fairly broadly disseminated. We don't have any huge shareholders that control a big portion of the company. But having said that, we do have a number of individual shareholders that each own a significant portion of the company. And, I believe the shareholders would not accept a hostile bid, that wasn't palatable to the shareholders at this time. So, I think that in itself would not allow the deal to go through. So.
Now, in the event that the West extension drilling does not result in any really meaningful zones to pursue, and IAMGOLD's contemplating, okay, economic study, but we have other things on the go. We're not quite ready to advance it that quickly, but there is the down dip potential beyond the pit limits. This is described as a new style of disseminated deposit for the Canadian Shield. I'm not sure how well geologically it is understood, but a question that I would have is, how deep have they assessed the system vertically, going beyond the pit limits? And if IAMGOLD decided, well, before we figure out whether this is just an open pit mine, let's go start drilling some deeper holes and see if it gets better and isn't just more of the same that ain't so great to underground mine. What do you think? What is the status of the deeper potential? Has it been tested? And is there potential for higher grade at depth?
Yeah, no, I think there's a lot of potential at depth. The current resource is calculated down to a theoretical pit down to 300 meters, and there are some holes that go much deeper than that, into the almost 600 meter range, and that do show mineralization. So obviously it does continue at depth, and there is a potential to increase as we go down. But let's assume that the grade does not change, doesn't increase as we go down, and stays the same. Drilling another, say, 100 meters of depth would add another 1,000,000 ounces. So far we've got 1,000,000 ounces per 100 meters of depth. So you could theoretically add a couple million ounces just by drilling, by increasing the depth of the deposit by 60%. And obviously you have to manage that based on what the strip ratio will be ultimately. But there is that potential. Now, in terms of the grade, that is possible as well. That remains to be seen based on the drilling that will happen. This type of deposit is actually, quite similar to other deposits in the Abitibi. It is an orogenic type of system, and which is similar to a lot of other systems or other deposits, I guess, in the area that do continue at depth and do increase in grade as you go down. And the only difference in this case is that the host rock ended up being sediments, but ultimately the source is the same. And so there is that potential that remains to be tested. I think you can add easily by increasing the open pit by drilling it deeper, but you can potentially go beyond that with higher grade and a potential underground mining operation eventually as well.
Mm-hmm. When you joined Vanstar earlier this year, you inherited several early stage projects assembled by prior management, amongst which is Felix, which is being drilled right now. But you, as a geologist with a career in investment banking, drilling long shot holes at geochemically blind geophysical targets doesn't really strike me as your cup of tea for growing a company. And I'm sure you don't just want to be a custodian waiting for IAMGOLD to get around to start negotiating a takeout deal. Now, if you could get a better valuation for Vanstar based on this 20% net interest that they will have, what sort of projects would you as a CEO seek to try and bring into the Vanstar fold so that you have 100% focus, that you can use the Nelligan value, fundamental value, as a stepping stone to leverage and perhaps even push IAMGOLD to act sooner than later in terms of making you an offer well before that feasibility study is completed?
Yeah, no, I agree. The way I looked at Vanstar when I first started is that, and I still look at it this way, is that we have an asset that is well on its way to being de-risked. It already has a fairly large resource. I have a lot of confidence that will be a mine, and then we have other assets that I would call much higher risk, in the sense that there's little exploration done so far. There's we have to drill it. It's like you say, sometimes it's blind drilling, and so the rate of success on those is not is not as high, or not as the risk is higher with these assets. So what I'd like to do is look at other assets that are sort of in a similar situation to, say, Nelligan, where it either has a resource already or something that has significant drilling that could have a resource that we can potentially acquire and build upon and turn it into another flagship for us. That we can control the pace of, and so on. So we are always on the lookout for these types of transactions. I'm looking at various projects and companies at this time on that front. And so that's the type of thing that we would like to consider. Obviously, it depends on where we're trading, what our valuation is, what their valuations are. I know we're trading at lows these days. A lot of other companies are trading at lows these days as well. So it's, it may not matter when we do these types of deals, but obviously it has to make sense whenever it is that we do it.
Do you have any mandate from the board as to sort of what regional focus you should limit your search to?
Well, because we have flow through dollars right now, Quebec tends to be the focus. Having said that, I'm not averse to looking elsewhere beyond Quebec, Canada and more generally, and then North America beyond that. So we're open to all of that. It's just more recently, or at least at the beginning, we're focusing a little more on Quebec because that's where we are. That's what we know very better internally, and we have the money to spend in that area.
So last year, Vanstar underwent a major management change when Guy Morissette, the founder, retired. You came on board early this year. The stock last year ran up to $2. It kind of interested me at 40 cents or so, but I snoozed and loosed and watched another newsletter writer drive it way up, and it's kind of overvalued. And you people all joined and took charge, didn't own any stock. I saw that you managed to buy some catching a falling knife at 72 cents, but in general, in the last 2 months, nobody has said he doesn't show any insider buying when the stock dropped below 50 cents and has been in what I regard as a 40 cent to 50 cent very good range. The market doesn't like this thing. It thinks there's no skin in the game, and yes, you have options and an interest in seeing this succeed. What is the reason that nobody has been buying the stock in the last 2 months when it broke into this current price range? Why should we see the stock as a bargain if the insiders aren't buying the stock in the open market?
Yeah, I think there's a couple of reasons. The insiders have been buying over the last, like in the early summer, for example, there was some buying. That's when I bought. We had to wait till after the Felix results were out, for example, because we're kind of blacked out before that. And now, we are potentially in some blackout situations as well because of things like drilling and or potential M&A opportunities and so on. So it's not, we're not able as insiders to buy any time that we want. And I guess, one point I'd make about, how much skin someone has in the game, it's easy to look at someone and say they have, a couple million shares of a company and say they have more skin in the game than someone who has, say, 100,000 shares. But they may both have paid the same amount for those shares. Once someone bought it at 2 cents when no one else had an opportunity to do it. And versus someone who bought it in the open market with everyone else in the market, I would say one of those has more conviction in the money that they're spending. So I would consider that as well. And in my case, for example, I put in more than my salary in terms of what I've bought so far, and so it's I think I am showing conviction by doing that. So.
Well, I think the problem you'll have is when the market notices that you guys have started buying in the market, they'll probably all start buying. So you'll lose your opportunity to buy a sizable position. And especially if IAMGOLD shows us some sort of evidence that they are starting to take Nelligan seriously and want to move it forward as they get their other projects like Cote operational and underway. And if we get the gold uptrend going, because that project, I priced it at the current spot price. If we end up with gold at 2,000 or better, we should see an even higher valuation and even greater incentive by Gold to become more aggressive about that, especially since it particularly stands to benefit from a stronger gold price. Well, this concludes our backstage interview with Vanstar Mining Resources. Thank you, JC St-Amour, for participating in this backstage interview.
Thank you very much, John. It was good to have. It's good to be here.